Well, they finally did it. In an attempt to fix the housing market, they're about to turn it into a downward spiral, the worst we've seen since the 2008 crash. We have one of the worst housing markets in many years. With record low inventory, record high pricing, and interest rates that we haven't seen in over 2 decades, we're about to repeat a mistake that caused the housing market to go belly up just 16 years ago. And what am I talking about? Zero down mortgages. They are making an unfortunate comeback in a big way. One of the largest mortgage lenders in the entire United States is now offering a 0% down program. This new program is from United Wholesale Mortgage, and they just launched it about 2 weeks ago.
United Wholesale Mortgage has done is it's kicked in the final 3%, which means that the purchaser of the home and the borrower of the debt doesn't have to pay any down payment. So they have no equity in the home from the get-go.
Now this may sound incredible to you, 0% down, but it gets really scary. Home buyers who qualify will not need to put down an upfront down payment. Instead, it allows buyers to finance 97% of the home's value with the first mortgage. Then they would provide the remaining 3% up to $15,000 in the form of a second mortgage. And pay attention to that word second mortgage because that's the scary part. I know many Americans would love to buy a home, but they don't have tens of thousands of dollars to put down on it. So this presumably solves that problem, right? Nope, you could not be any further from the truth. Actually, that massive roadblock that this program is trying to overcome is making many experts really nervous. And why are they nervous? It's because these loans can actually backfire on homeowners, especially if home prices stop going to the moon. And for some, like me, it's bringing back bad memories of the subprime mortgage crisis that we saw all the way back in 2008. Is it actually responsible to give low-income individuals that can't afford to buy a house a program like this? I am really concerned, and I'm going to tell you why throughout this video. And for those that don't know, I'll explain what happened during the 2008 financial meltdown, but first, I want to explain why this program is sending shivers down my spine. So home buyers who qualify, they're not going to need to put down a down payment when buying a home. Like I mentioned before, what makes this program so attractive is that 97% of the home's value is covered by your first mortgage, and then the other 3% up to 15 grand is covered by the second mortgage. So it sounds really good to people. That second mortgage won't accrue interest, but it does need to be paid off as a balloon payment in full when the home is sold, or the home is refinanced, or the home is paid off. Here's the catch. These mortgages are only available to people making less than 80% of the area's average median income. So as an example, if you were making $100,000 in that area, you would only qualify for the program if you made $80,000 or less. Again, this program is targeting low-income individuals that don't have the money to buy a home. If you were around back in 2008, I'm sure this is starting to tick off alarm bells in your head because this is sounding awfully familiar to me. In a statement, UWM has said that they have a massive demand and that there's already thousands of applications being filed. And I'm sitting here thinking, no, you have a ton of demand. Who wouldn't want to buy a house for $0 down? UWM then goes on to say that no other banks or no other mortgage companies are offering this type of program right now. And I wonder why. Maybe because it's one of the stupidest ideas I have ever heard of in this current economic situation, and nobody is dumb enough to offer a program like this. Let's talk about UWM. Who are they? What do they do? Where did they come from? They're a wholesale lender that matches up realtors with home buyers to a mortgage program through their mortgage matchup program. If you haven't caught on already, why is this such a big blunder that is going to cause massive concerns later down the road? Well, the major risk is because homeowners have to put $0 down, they have zero equity in the home immediately. That means that they would instantly be underwater, which means that they would owe more money than the home is worth if this red-hot housing market suddenly cools off and goes down. And that is a very likely possibility, especially considering that the government is actually trying to get the housing market to go down. In an election year, they're supposed to lower interest rates. Historically, that has happened every 4 years. But this year, even though the Fed came out and said they're going to drop interest rates 3 times, they haven't done it yet, and we're in May. Not only did the mortgage rates not go down, they're actually slightly going up right now. If they did lower interest rates even by 1 percentage point, it would actually trigger millions of buyers to enter the market and start scooping up all the homes. Meaning supply would go down and prices would go up, which would be an absolute disaster for this current housing market. You would think that $0 down mortgages and low interest rates would be a good thing, but in this certain circumstance, it is not. Under these certain circumstances, it can trigger a meltdown, much like we saw during the 2008 financial crash. Let me explain why a 0% down payment could trigger another financial crash. But first, I want to go over what happened during the first financial crash back in 2008 and explain why it happened. The 2008 financial crisis, also known as the Great Recession, was one of the worst crashes since the Great Depression. It was caused by a number of factors which are going to sound awfully familiar to what I'm talking about right now. On one hand, there was a housing bubble. Wink, wink. Easy to come by credit and relaxed lending standards led to this housing bubble. When the bubble burst, banks were left with trillions of dollars of worthless subprime mortgages. Then there was predatory lending. Banks issued mortgages to low-income individuals, and financial institutions sold mortgage-backed securities and complex derivative products at unprecedented levels. That sounds awfully familiar to the program that UWM is hawking down our throats to, you guessed it, low-income individuals. There are a few other factors like lack of regulatory oversight and excess risk-taking, but I'm sure we're not going to repeat those mistakes again, right? I'm sure our public authorities are looking after us regular citizens instead of the companies that they're overseeing and regulating. We all know that crisis led to the bankruptcy of many major banks, it led to government handouts, and it led to an absolute panic in the loan market. The Great Recession cost many people their jobs, their savings, their livelihood, and their homes, and I fear we might be heading right back in that direction. So to get back to these seemingly attractive $0 down payment loans, like I said before, if the housing market starts to cool down, all these new home buyers who can't afford to buy a house but just got one anyways are going to be underwater just like they were back in 2008. And if this new home buyer is underwater, that could be a massive problem if they decide that they have to sell their house. And there could be many reasons why they need to sell their house. What if they lose their job? What if the economy takes the turn for a worse? What happens if there's a sudden medical emergency in their family and they don't have the money to make their mortgage payments anymore? Or how about if they just need to relocate? Suddenly, they'd be on the hook to pay back that second mortgage. Remember before how I said pay attention to that second mortgage? Well, this is why it is so terrifying. Because they're underwater, the home sale won't generate enough cash to pay off that debt. If this were to happen, the home buyer doesn't have the money to cover the difference. They will be in default of that second mortgage and at risk of a foreclosure and destroying their credit. That scenario is exactly like the subprime crisis when many homeowners went underwater and weren't able to pay back their loans and they lost their homes. If it happened before, it can happen again if we're not careful. And I'm going to explain exactly why we're not being careful right now. We really want to use history as a guide to not repeat the same mistakes over and over again. As good as these $0 down mortgages sound, I really hope that other companies, the companies that UWM is bragging are not doing this kind of program, don't just throw their hands up and say, you know what, let me do it too. Because the housing bubble that popped all those years ago was fueled by a ton of companies that were doing these subprime loans. In the years leading up to the bubble, lenders came up with new products like adjustable rate mortgages and no down payment loans that ended up blowing up when home prices eventually collapsed. So all of these subprime borrowers went into default and they had to wave bye-bye to their nice brand new house. And make no mistake about it, the housing market is on fire. Home prices are at record highs in some areas, and the demand is so strong that all these cash offers are pushing the prices even higher and getting people to bid over the asking price. This is not the case everywhere. I have clients that can go in a little bit under asking price depending on the circumstance, but I've also seen many cases where you actually do have to bid a little bit more when there are multiple bidders. If you guys don't know me, my name is Andy Coleman. I've been a real estate agent for about 4.5 years now. I have closed over 750 deals, so I am knee deep in the housing market right now. It's not as crazy as it was back in the beginning of 2022 during the peak, but it's still not a buyer's market just yet. And what's going to turn it into a buyer's market is the federal government starting to cut interest rates, which is another potential issue that homebuyers can find themselves in with these $0 loans if they get locked into the high interest rates now and the Federal Reserve starts lowering interest rates. That's because in order to refinance at a lower rate, the homeowner would actually need to pay off that second mortgage. And the reality is, if they didn't have the money to buy a house in the first place and they need a $0 down program where they can't even afford a $10,000 or $15,000 down payment, what's the odds that these lower income individuals can actually pay back that second mortgage? Pretty slim if you ask me, unless they have a rich Uncle Ted that passes away and they fall into a boatload of inheritance money, or they fall and slip on a banana peel at the local Piggly Wiggly and threaten to sue them for everything they got. Barring one of those crazy scenarios, they're now locked into those higher interest rates because they have no equity in the home. Guys, there are many other options for zero down mortgages that aren't as nuts and crazy as this program. I have a list of like half a dozen of these, and I even have tricks to cover all the closing costs as well. Drop a comment below if you want me to make a video on this without going through this crazy ass program that UWM is pushing right now, because I would be more than happy to do so. Now let me go over some of the terms and conditions that this UWM program is offering right now, so if you do decide to take this zero down loan, you can be educated on what you're potentially getting yourself into. And don't get me wrong, this could work for some people, but you need to read the fine print and see if this is going to be a good fit for you in the long run. I usually say if it's too good to be true, then it is. So ask yourself some very simple questions, like how do you pay off that second mortgage? What's the plan? What's the timeline? What happens if plan A doesn't work out? Do you have a plan B? And I'm not talking about that morning after pill you take after a wild and crazy night when your pullout game is weak. I'm talking about a backup plan to keep a roof over you and your family's head. We need tougher financial regulations. Have we not learned our lesson from the 2008 crisis? I'm just worried that a mortgage program like this are going to hurt some borrowers if the market takes a turn for the worse. In my mind, these mortgages are like ticking time bombs, just like subprime mortgages were. Unless home prices continue to skyrocket, this program has the very real possibility to turn the American dream of buying a house into an American nightmare with a scary plot twist straight out of an M. Night Shyamalan movie. And we all know how crazy that can be. Yes, prices are going up in some areas, but they're beginning to cool in others. We really don't know if we're in a housing bubble that's going to pop or if the trend is going to continue to rise. But we do know that tempting low-income individuals with 100% mortgage programs like this, when housing prices are at historic highs, should cause major cause for concern. Experts in the industry are saying that the UWM loan program has all the characteristics that made the subprime mortgages bad. UWM executive Elizaj, and I might be butchering that name, he did actually speak on these concerns, noting that borrowers must still go through strict underwriting guidelines. He said, and I quote, "People who make these claims are uneducated about the industry. In today's environment, UWM is responsible for the loan, which gives us confidence these are high quality loans. It's helping consumers and it's a great win across the board. Think of all the people that are renting and would love to buy a house, but they face this roadblock of coming up with $10,000 or $15,000 as a down payment." Yes, it does eliminate that, Mr. Elizajir, or however you pronounce your name, but is it truly responsible to let a person who can't even come up with a measly $10,000 or $15,000 down payment buy an actual house? They are making less than 80% of the median income. If things take a turn for the worse, these home buyers are going to suffer in the long run. It's also worth noting that some experts say that lending standards have improved significantly since the 2008 crash. The days of ninja loans, which stands for no income, no assets, and no job, are just about gone. And so are adjustable rate mortgages. Greg McBride, chief financial analyst at Bankrate, had this to say: "We're not going back to 2006 here. Lending standards are light years removed from pre-crisis when there were oftentimes weren't any standards at all. And yes, that is true, but we should be very cautious when giving low-income individuals a program like this, when they weren't even responsible in the first place to save enough money to put a down payment down on a home. In my mind, you need to have a little skin in the game. And come on, $10,000 or $15,000, that's not that much money. If you can't afford that, in my opinion, you should not be buying a house. I tend to think if you can't do that, then you don't have your priorities in order. You're out there spending money on things that you don't actually need, and you're not being responsible enough to save your money. One of the major lessons of the subprime crisis was making it way too easy for people to borrow money who couldn't otherwise afford it. I don't think we're doing any favors for these borrowers. I think that we're setting them up for a potential disaster if things take a turn for the worse. And I'll leave you with this: what goes up must come down. Thank you guys so much for watching. Share this video with a friend that didn't know that this kind of program that you can put $0 down even exists. Who knows? Maybe it might even work out for them. I know I'm being paranoid here, so let me know your thoughts below. Do you agree with how I feel, or do you think that I have a right to be concerned? Don't forget to like the video if you enjoyed it, and please hit that subscribe button. I put a ton of time and effort into these videos, so you guys liking and subscribing and even sharing means the world to me. And if you like this video, click on the video above. I talk about renting versus buying and what the 9% rule is. All right, that was pretty good, not bad.